Yeah, hello and welcome to another update video about Bitcoin. Bitcoin moving higher as currently in line with expectations. Bitcoin also reversed in the reversal area. We'll see how substantial that is and how sustainable. We have currently not yet broken above, not clearly above this ascending trend line that I also mentioned in the previous video. Very important. Yes, we've broken out of the channel what we waited for. Yes, it's an impulsive move. And yes, we've broken above the wave 4 high as well. Now we've got the channel to deal with. I think that's a very important signal, breaking out of this so-called bear flag. For me, that's not really a bear flag anymore. That's why I give the bullish breakout a 60% probability. As already told you, there's a few points here where I don't consider that a bear flag. For example, this sort of curve that is forming here. Yeah, this curve. Also, I've seen a few comparisons of both of these. Yeah, this was a bear flag to me. Absolutely. This was not an impulsive wave structure. This here is it. These are the differences. Yeah, I've seen a few comparisons on Twitter where people say, right, look at this and look at this, it looks the same. No, it's not looking the same. It looks different. This looks much tidier. You can count these waves which are coming up impulsively, yeah, by applying the Elliott Wave rules. There are clear rules. We couldn't do this here. We couldn't. And also, if there was a subwave that we could count impulsively, it was invalidated. So just give you an example here. I mean, an absolute mess. Yeah, and you don't get that in this in a bullish breakout scenario. That's why I told you when we were up here, this is nothing where you can build a new all-time high on very clearly. So I mean, first of all, look at this. Yeah, this sort of curve to the downside, not a good signal. Then, yes, we came up quite strongly. That was actually not a bad signal. However, the structure that then developed, you made, yes, a higher high and a higher low. You made another high and a higher low. You made a lower high and a lower low. Yeah, and then you had these 99% retracements again. Here you even retraced more than the previous one again. And here you came down even stronger and made a continuous series of lower highs. Not good. Not good. And also here then you moved up, you crashed down again, like in a straight line. You made a lower high. All of these are things, this mix of lower highs and lower lows, and then higher highs and higher lows. It's not healthy. And also this sort of not very tidy looking. I mean, when you start an uptrend, you're looking at higher highs and higher lows. You're not doing that. And you're also looking at impulses, which we didn't see here. And especially those 99% retracements are never good. Now, we don't have these 99% retracements here, as you can very, very clearly see. We retraced very nicely always to the Fibonacci levels that are of relevance for a wave 2. Here, for example, we found support at the 61.8% Fib level. Very nice. Here in this wave 2, yeah, so we moved up in a 1, we came down in a 2. I think that was also 61.8 or the 78.6. Let's take a look. Yeah, also pretty much the 61.8. And here, where did we retrace to? I think it was the 50%. Yeah, of course we can drop a little bit lower, but yeah, here pretty much the 50% at 22.6k. So this is the difference, okay? And then you've got this curve to the upside, which at the moment at least, things can always change in charts. At the moment looking good. Now waiting for that breakout above this channel. Which again, I don't consider a bear flag, but it can be. Yeah, I mean, it can sort of still break to the downside, of course. That's why I give you, at the moment, a clear, my judgment of the situation is that 40% probability it can still go down. But we have to start to acknowledge that we can count this bullish, and as long as key lows are not taken out, it would just purely be speculation. A lot of people saying we come down once more, we have to come down. No, we don't have to come down anymore lower. Yeah, we had to come down below 28.6, which I've been telling you since November, which we did. We had to. The chart told us that since November, and we reached that area. Now we don't have to do it anymore. We can. Yeah, we can. With a probability of 40%. Still make lower lows, but the chart doesn't need to do it anymore. Yeah, so all the targets to the downside have been fulfilled. All the requirements to end this correction have been fulfilled, and we can become carefully bullish as long as key lows aren't taken out. And one of these key lows is 20.7k. That wouldn't invalidate the bullish scenario, but a drop below 18.9k would. but below 20.7 we already need to challenge the bullish scenario. Absolutely, it would then get less likely. For now, I think it's adhering actually quite nicely to the bullish scenario, and we obviously now here we broke out of the channel. That was expected. Yeah, we talked about that in the reversal area to expect the reversal. It happened. Now I need to change back the wave count here. I told you earlier today that I'm changing the wave count to this. Should we make another lower low, then I would have to change it to this. Now I never changed it back, so let's just do this together. The overall wave count here, the way I see it at the moment, is that what I already showed you here in the last few days anyway, that this was V3, this was, if I remember correctly, was the 4, yes. And then we had the 5 here with a wave 1, completing a wave 1. We then came down in a wave 2, so found the low here. And then yesterday I told you here we already made an impulsive move and came down in a 3-wave move, setting up probably for a breakout of the channel, which happened. But then here the subwaves, again, that is relevant. Let's just label that as well. The wave W is the first of these waves to the downside. Then we had a wave X high and the wave Y to the downside. Each of these consists of 3 subwaves. What is very important, if we can get above this bear flag resistance, then the next target will be here, the 24.2k level actually, the wave X high. Just above that we've got the 24.3k level, the wave 1 here. And getting above that can then move us to $25,755. And that is, again, just need to remind you, this will be a key decision point here, because this is the ideal scenario for the retracement in a bearish scenario. So at the moment, we still need to expect that this could just be a corrective wave pattern. It's possible, and that we then come down afterwards. And that would be my 40% probability. All right, and that is currently what we see. So primary expectation would be further upside. That would be in line with the stock market, the gold market, the silver market, which at the moment appear to have finished their corrections as well. The S&P 500 performing absolutely in line with my bullish expectations at the moment as well. The Nasdaq as well. But again, for all of them, we need to be a bit careful still. We are still very, very early in a possible uptrend, very early. And at any point in time, this can still change. But we're just building the foundation for a sustainable uptrend, and therefore this is still very, very shaky. And but the foundation can be a good one. This would have been a very shaky foundation. This can be a solid one. Okay, and that's my view about Bitcoin. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.